Hey guys, it's May from Markets with May, and I wanted to do a brief video on the articles that showed up this morning suggesting that AMC defaulted. Now, I have seen some kind of corrections, if you will, from Yahoo Finance subsequently, but the initial article, I got tagged on this first thing in the morning, and while I loved the question and I loved being able to help other people understand what they're seeing, I was mad at Yahoo Finance for failing to do their DD on this before publishing it. Now, the format of this video, I'm going to talk about why they published what they published, and then I'm going to talk about why it was really deceptive the way they spun it. First, the disclosures, past performance is not indicative of future returns. I do own the AMC bonds, but I own the subs, which means that I will get zeroed out if the company goes bankrupt. So I'm not thrilled when this kind of thing gets posted. The second thing is I do own stock in AMC. Now let's get into what happened and why it is that the way that they published it was a bit deceptive. Now first, let's talk about why they thought that this was a default. And that really has to do with the way that Moody's classifies the debt for equity exchanges when they're done the way that this one was done. The debt for equity exchange in and of itself isn't always considered a default. It's because this one was done at a premium to the equity value and was done marking the bonds where they were. And so that necessarily looked like and does mean financially that whoever owned the two L's was taking an L. Now, I had discussed that this was probably the right call for anyone on the debt side that just needed their capital back. The weird thing for the debt holders and why there's an incentive to do this is because at December of last year, all the bonds were trading significantly lower. I mean, most have traded up 20 to 30%, plus AMC has been good on the dividend. Now, this gets a little complex, and I'm not going to go through it in a detailed way, but essentially, from last year to this year, a high yield debt fund would take a gain on the mark. So when they go to present to investors, it looks like a really big gain, probably to the tune of 25 to 30% on any of the AMC bonds. However, because of where the bonds were struck closer to par, you get to take a tax loss. And that's great in a year where you just have really aggressive positive markets in both debt and equity. Hence, to summarize, for any debt fund that might have done this, it was a win-win. From the fund's perspective, you get the tax loss benefit, the increase from the beginning of last year, and then you get your capital back. Plus, AMC actually did pay its dividends on the 2L. So why is it still considered a default? Well, it's considered a default because essentially the bondholders were willing to accept something less than par plus whatever's on that call schedule. So usually if you pay early, you have to pay a little bit of a penalty for doing so. But if it's true that they defaulted, why am I so upset with Yahoo Finance? Well, I'm upset with Yahoo Finance because first of all, they didn't describe it as a limited default. And second of all, the article really had to do with the idea that corporate borrowers weren't paying back their lenders. And that's technically not what happened here at all. First and foremost, debt is a contract. The lendor and lendee have the right to come up with a solution to the debt situation. And that solution is a far cry from failing to pay your bills. Second, the agreement between AMC and the lender that took the deal does not imply that anyone else holding the debt must do the exact same deal or that the bonds necessarily require being marked down. The third thing that is kind of upsetting about this is having paid down this debt circumstances are actually improved, not deteriorated from this action. And the final thing is that unlike some of the other companies that were mentioned in the article, this does not suggest that bankruptcy is imminent for AMC. Now, they still have a lot of debt to pay back. Totally give you full props for that. But if anything, this activity walked them in the opposite direction of bankruptcy. That's all I have prepared for this video. If it was helpful, please do like, share, comment, subscribe. If it brings up other questions, feel free to stick those in the comments. And until next time, good luck in these markets.